Hey traders, welcome back. It is Thursday, February 12th. Hope you had a nice day today. Let's get right into it. So the markets just wrapped up one of the ugliest sessions of the entire year so far, although granted we're only in February. Still, it was a pretty down day. And the reason might surprise you. It wasn't bad earnings. It wasn't geopolitical crisis. It was the promise of AI turning into a threat. And that's because Wall Street got spooked today as investors started asking an uncomfortable question. What happens when AI doesn't just build new industries but actually destroys old ones? The Dow dropped 669 points, falling 1.34% to close at 49,451. The S&P 500 shed 1.57%, settling in at 6,832. And the Nasdaq got hit the hardest, tumbling over 2% to finish at 22,597. The sell-off erased early morning gains and accelerated into the close. So what was the biggest drag? Cisco, the networking giant, collapsed 12% despite actually beating earnings estimates. Record revenue of $15.3 billion, double-digit order growth, but investors zeroed in on margin pressure from rising memory costs, and the market punished the stock like it missed. That's the mood right now. Even winning isn't good enough. It's very strange. I wish I could explain it in more detail, but I honestly can't. But that's just what's been happening over and over again. Stocks have actually made their numbers and still the price will crater. So that's what's been happening. Meanwhile, Apple dropped 5% in its worst session since April after reports that Siri upgrades hit major testing snags, delaying the company's AI rollout by months. When you're Apple and your AI story stalls, the market does not forgive. And it didn't stop there. Amazon, Meta, Broadcom, and Palantir all fell more than 3% as a broader wave of AI skepticism swept through tech. The fear? It's that automation tools are advancing so fast that they could actually gut the business models of entire software sectors, and not someday in the future, but soon. Outside of tech, banks took a hit after the White House pushed to cap credit card interest rates, raising margin concerns across the financial sector. But not everything bled red today. Micron was a standout, rallying on news of progress in next-generation high-bandwidth memory chip production, the kind of hardware that actually powers AI infrastructure. And McDonald's posted a solid earnings beat with revenue topping $7 billion, though the stock barely budged. Even good news couldn't overcome the gravity of this sell-off. So here's the bigger picture. Yesterday's strong jobs report at 130,000 new positions versus only 55,000 expected is now working against the market. That's because a hot labor market gives the Fed less reason to cut rates. The CME FedWatch tool is pricing in a 93.6% chance of a June rate cut, but tomorrow's CPI report could change everything. If inflation comes in hot, those rate cut hopes evaporate fast. So today was definitely a reality check. The AI trade that powered this market for over a year is evolving, but it's evolving from euphoria into something a lot messier. Winners and losers are being separated in real time, and heading into CPI Friday, the pressure isn't letting up. So that's it for today. Again, hope you had some good trades today, and as always, in this market, in the current market that we find ourselves in, it's extremely important to stay sharp and make sure that you don't take anything for granted. So when you trade, get in quick, get out quick. Don't take anything for granted. That's the main takeaway. So until tomorrow, have a good night, and I'll see you back here tomorrow evening. Bye-bye.